So this is very interesting news. We have this article coming out of Cointelegraph.com that says from the blockchain.info CEO that the central banks in the world will start holding crypto in their balance sheets and in their reserves in this year of 2018. And so blockchain.info CEO Peter Smith, who was speaking on an interview on CNBC, had stated that I think this year, 2018, speaking, will be the first year that we see central banks start to hold digital currencies as a part of their balance sheets. And so traditionally, central banks, they want to hold world reserve assets. They want to hold world reserve commodities. So they have a balanced portfolio. So if one country has war, that they still have currency from these other world reserve currencies, which would still be accepted. And so they can balance transactions from one currency to another by having both currencies in their accounts. And there's a lot of reasons, as you can imagine, why central banks hold all of these different currencies like dollars, rubles, yen, gold. And what Peter Smith is saying is that in 2018, they're also going to be holding crypto. Could be Ethereum, could be Bitcoin, could be a percentage of any of the coins that go on the top 10. I mean, they could have a program to buy a millionth of every coin that ever exists, and they have the capital to actually purchase that at this point of the game. Smith goes on to talk about how in South Korea that they have announced with the governments and the regulators that they're not going to say that Bitcoin is legal. They're not going to say that Bitcoin is a currency, but they're also not going to say that Bitcoin is illegal. They're essentially going to give the wink and a nod that you have the ability to use Bitcoin, and you are going to be assuming a lot of risk for playing with Bitcoin, and you're definitely going to have to pay your taxes for making capital gains in Bitcoin, but we're not going to tell you it's wrong. We're not going to tell you it's illegal. We're not going to tell you it's a scam. We're not going to tell you necessarily that it's a bubble or that it's comparable to tulips. But that's what's happening in South Korea. And also South Korea, Shinhan announced that it would be the first major bank to offer customers Bitcoin wallets and storage. Seems really risky to me as a centralized point of hacking. But nevertheless, that bank is going to be offering those services in South Korea. Conversely, I suppose, the governor of Denmark's central bank this week described Bitcoin as deadly and urged their citizens to stay away from it. And so this is really, really interesting. And so we just, in the previous video, talked about Japan and talked about the Japanese government allowing Bitcoin to be used, to be accepted, sort of saying it's not a currency, but saying it's not a currency yet. And not only are the Japanese people hearing this information, but the other countries in the region, like China, South Korea, even countries across the EU are also hearing this. And so South Korea is taking a similar sort of stance that we see Japan taking, but the Denmark central bank is taking the extreme opposite. They're telling people it's deadly. They're telling people it's like tulips. They're pushing people away, and they're pushing Bitcoin and blockchain technology out of their countries, where Japan and South Korea are creating an inflow of these Bitcoin and cryptocurrency into their countries. And additionally, on top of just that, at the regulation level of the cryptocurrencies that we know and love, we also have central banks that are likely going to be issuing their own cryptocurrencies, their own branded digital assets. M&T Bank Coin, Bank of America Coin. And then not only are the banks going to be issuing their own cryptocurrencies, Ripple, I suppose, is another example. UBC is another example. But in addition to that, we also have governments like Russia issuing the Bit Ruble. We have Dubai talking about issuing their own cryptocurrency. Just like in the other video with Japan, we know Japan has long announced its plans and desire to issue a J-coin based on blockchain technology to facilitate these fast digital payments that transact and reconcile very, very quickly. And so once these central banks start holding reserves, once people see the balance sheets of the central banks and they see crypto, they see Bitcoin, they see Ethereum, that is just going to trigger a psychological response in other banks, other central banks and other banks. It's going to trigger a psychological response in the minds of governments around the world, in the minds of business leaders every level of the game, and then it's going to trickle down to other business owners and then consumers. It's going to create a financial arms race. Once the central banks who have been saying Bitcoin is a scam, Bitcoin is a Ponzi scheme, Bitcoin is deadly, Bitcoin is like tulips, Bitcoin is sky is falling, Bitcoin, will give you an STD. I don't even know. Everything they're saying about Bitcoins, and now finally they're saying, well, we're going to do these Bitcoin futures, and Bitcoin is really deadly, but we're going to buy a whole bunch of it and put it on our balance sheets. No. Once people see that they're putting Bitcoin in their balance sheets, there's going to be this financial arms race. And once that financial arms race happens, wow. If 2018 is the year that these banks put Bitcoin on their balance sheets, then 2018 could be the year that we see Bitcoin fly past $100,000 a coin. And so real quick, just to underscore the sort of thinking from these different thinkers across the world who are trying to take Bitcoin and fit it into their existing box. Bitcoin doesn't fit into the existing box. They're trying to understand it with the existing system and the existing way of doing things, which has dominated our world for about the past 100 years. And so over the past 100 years, hundreds of years ago, back around 1668 maybe, we have a tulip mania where the central banks were not issuing tulips. And because the central banks were not issuing tulips, the central banks weren't able to control the money supply of tulips. And now, central banks aren't issuing Bitcoin. It's no one's issuing Bitcoin. It's just a protocol that has rules and sort of governs itself. And so because of that, they're saying that Bitcoin is deadly. According to this article at coindesk.com, the Danish central bank chief says stay away, comparing it to tulip mania and saying that the whole industry is completely unregulated, thus provides no protection by the authorities. And I have very, very good news for you. And he has very good news for you as well. It is the responsibility of you as an individual, as an investor, as someone a part of this human revolution to not complain to them if anything goes wrong. It's up to you to be responsible for your own wealth. It's up to you to be responsible for your own sovereignty. And he says this to you in the form of a sort of warning. And I say this to you as a form of reward for being a part of this news and being a part of what's happening in our world. That this responsibility, for the first time since gold was made illegal, is now back in your hands. It's now back in the hands of the people of this world without borders, without definition, beyond the rules of the defined Bitcoin protocol. This is just the history of how they think about Bitcoin as well. Back in 2014, the Denmark's national bank compared Bitcoin to glass beads and again said that Bitcoin is not money because it's not backed by an issuing institution. Again, trying to fit Bitcoin into the old world line of thinking. And this is just in contrast to what we're seeing from ccn.com, where the South Korean financial regulators are saying that Bitcoin isn't a currency, and because it isn't a currency, it won't be regulated. So they're not saying that this is deadly. They're not saying that this is tulip mania. They're not saying that this is a bubble. They're saying that for the primary reason, according to the authorities' governor, is that the lack of recognition of cryptocurrency as money doesn't exist. And so there's no recognition of cryptocurrency as money, so cryptocurrency is not money. And so all that they can do, what the governor is saying, is that all they can do is warn people that they don't see virtual currency as the actual type of currency, and so they can't stop it, and they can't step up the regulation, and they can't step up the regulation at least for now. So what they can do is oversee that the local Bitcoin and cryptocurrency stops with a handful of rules without getting into the deeper regulations. And what these rules are going to focus on is a framework for enforcing the taxation of the cryptocurrencies because everyone needs to always pay their taxes. But essentially what they're doing, on one hand, just recognize that the one government of Denmark is, the regulators at least, they're saying Bitcoin is deadly, stay away. And on the other hand, we have South Korea saying, use it, allow it in, just like Japan is doing. And at this point, what we're recognizing and what some people are talking about over here on Reddit is that it may be extremely risky for the wealthy to not invest in the Bitcoin. And just thinking about the mindset of people who have lots of money, millions and millions, tens of millions of dollars, the only risk that they have, they're diversified across money, property, houses, collectibles like cars and art, stocks, bonds, gold, silver, all of that. But overall, if the value of money goes down, if the value of the fiat goes down, then that's going to have a huge hit to their portfolio if their portfolio isn't balanced with all of the existing financial instruments that are now a part of the world. And so before, if they were diversified across 100% of all of the financial assets in the world, and now there's these new asset classes around Bitcoin and other types of blockchain technology, decentralized and not, then there's now a percentage in the portfolio that's missing. And they're assuming this risk that the rest of the fiat is not going to go down, and if that fiat does go down and they don't have the other part of the world financial market to balance that portfolio, then that's just going to create a sense of risk for them, especially as they see their friends, their maybe family, hedge fund managers, countries, central banks start holding their own cryptocurrency. That's going to create this psychological trigger that they also need to get in the game before it's too late. So check this out. So we have a Bitcoin fund manager looking at some charts over here, and I thought this was funny. I had to share it. Some rich noob spent $100,000 per Bitcoin, even if it was for a fraction of that Bitcoin. They spent $100,000 per Bitcoin on this website on November 28th. So that's just really interesting. Someone was just like, "Oh, I want Bitcoin." They just threw in a bunch of money. They said, as much as this much Bitcoin, and they just bought it. They had and somehow. I don't even know exactly how that happened, but it was just someone that had a lot of money, and they wanted Bitcoin, and they just went in and they was like, "I just want it." They probably don't even know how it works. And so just recognize that that's going to be happening. And so the point of this video is that 2018 could be the year that we see the central banks start to not just accept cryptocurrency as an asset, but to actually hold it in their balance sheets, making a shift from saying that Bitcoin is deadly, and then other banks moving further down the road into the Bitcoin legitimacy, which will create the room for them allowing to have it on their balance sheets and have it on their banks. And this creates these other psychological triggers, this financial arms race between the central banks, the governments, the business leaders, the consumers, to then recognize that they need to get on this Bitcoin train that can exacerbate the price of Bitcoin beyond belief. And it can happen rather rapidly. It just adds on to the fact that Bitcoin is going to be going through many years of volatility, even though the ultimate trajectory is on that upward moonshot sort of hockey stick motion. So the last thing I just want to show you and bring up to you related to all this is that we've talked about the number of people who own Bitcoin in the past, and we know the number of Bitcoin wallets that exist. We know the number of Bitcoin wallets that exist and the number of those wallets that have at least 0.001 Bitcoin or something to that effect. And when we look at the number of those wallets that exist, we got to recognize that some people own multiple wallets. Like maybe you have like an old wallet you use there and an old wallet you use there. And so the actual unique number of owners is going to be less than the total number of Bitcoin wallets that have a certain threshold of Bitcoin on it. And when we look at those wallets, and we look at how many of those wallets have Bitcoin on them, and we divide those wallets by the number of people in the world, we recognize that less than 1% of the whole world is involved in Bitcoin. Less than 1% of the whole world. It's probably less than a tenth of the whole world, even with updated numbers. And so when we look at this technological adoption curve, we see that the early stage of this are the innovators. And this is putting the innovators at 2.5% are the risk takers who have the resources and the desire to try new things, even if these new things fail. And so if less than 1%, if less than 10% of the world is involved in the Bitcoin blockchain, the Bitcoin technology, then, and you're watching this video and you have any amount of Bitcoin whatsoever, then you are a part of this early 2.5%. We are not at 2.5%. We are not at 1% yet. We are not at 1% yet. You are before the 1% of adopters if you have any amount of Bitcoin. And right here, this line, you're looking at the end of 2018 or maybe 2019, because shortly after we get into this line is going to be 2020. We're going to have the next halving, and the next halving, it's possible we could be past this 13%. And so when the banks get on, when the banks start holding it on the balance sheets, when countries start holding Bitcoin in their treasury reserves, when corporations start holding Bitcoin as part of their asset portfolio, when people are investing in a Bitcoin in their 401k, this is going to be crazy. This is going to be exponential. And what's really deceiving about this graph is that this is the technological adoption curve of the percentage of people who are getting involved into the Bitcoin and the blockchain technology. But then on top of this, we have the S curve, which is showing the total percentage of penetration across the planet as more and more people enter into the adoption and acceptance and usage of the technology. And it's just to emphasize that even with Bitcoin being $20,000, the potential for it to go up is practically infinite versus the chance of it going in the opposite direction, minus some, astronomically, statistically low catastrophic event, which if something like that was to happen, then, there's a lot of other issues that people have to worry about. And hopefully you have canned food and lead, because, that's what a lot of people say is the most valuable stuff in the world. Whoa! Bob McCall, $10. Thank you very much. That's crazy. Thank you very much. Wow, that's our first super chat ever. That's very cool. Thank you very much, Bob. All right, so Rough to Play says that can't really see the point of creating these national currencies. It goes against the Bitcoin white paper principles of decentralization, borderless, peer-to-peer transactions. Yeah, so first of all, let's recognize that nations and banks don't care about the white paper principles, and they're probably against the concepts and principles of decentralization, borderless, peer-to-peer transactions. But let me help you maybe have some clarity about why national currencies would want to become, blockchained, and what the benefit of that would be. And so paper money inside the United States is paper money. Even when you're transacting it from a bank to a bank, it takes some amount of time. Sometimes a bank wire transfer can take a day. Sometimes a bank wire transfer can take a couple days. I was talking to someone recently who said that a bank wire transfer for them always takes a couple hours, and I just thought how lucky and privileged that they must be that they can, be able to get and receive and send money so quickly, when for most people it takes a long, long time, and the percentage cost is just astronomical for the amount of money that people are sending. The point is that the fiat currencies are slow. They're not fast. They take a lot of time to reconcile, and there's a lot of cost involved. And so the two disadvantages of fiat money compared to blockchain technology is that it's not fast and it's not cheap. The reason banks love blockchain technology, they hate Bitcoin, but they love blockchain technology, is because blockchain technology will make fiat both fast and cheap. And so the fiat money will not have the principles of Bitcoin or the principles of the Bitcoin white paper, but regardless, the banks and the regulators can take the advantages of the technology and use it for their own purposes. Maybe that makes sense, but why would anybody want the fiat currency? Well, we have to recognize that in business and politics, there's systems of sticks and carrots. And so sticks are the consequences of using Bitcoin, or the consequences of not using the fiat cryptocurrency. And that can be balanced either somewhere between 0 and 100% with carrots. And the carrots are the incentives of using the fiat crypto, if you will, the Fed coin or the bit ruble, and the disincentives of then using, not receiving values, not receiving additional benefits if you use the Bitcoin currency. The short term, this is going to let the fiat currencies compete with the cryptocurrencies. As the fiat currencies also control the government, they'll be able to use these sticks and carrots to sort of get people to do what they want, right? And then what else? And then in the case of Russia and the bit ruble, we saw that people are going to be able to convert Bitcoin into bit rubles. Doesn't matter probably if you're from across the world and you're just laundering money, or they're trying to get your Bitcoin converted into something, or if you're inside Russia, if you don't know, if you can't say where that money came from, then the bit ruble is going to impose like a 13% tax, or could be as high as 17% tax, which is essentially saying that there's like, called a 15% tax, money laundering fee, or siphon your money in through Russia fee. And this is going to allow the exchange, it's going to, just like Bitcoin allows the pegging of Bitcoin to every fiat, the Bitcoin of every altcoin, the bit ruble in Russia is going to allow the pegging of Bitcoin into, this cross peg between Bitcoin and the fiat currency, which is going to allow people to have more ease to exchange between cryptocurrency and their uses in Russia. And it's also going to create more liquidity of getting more Bitcoin into the country of Russia itself. Fiat crypto goes against the principles of blockchain technology. There's definitely, we can reasonably predict that this is going to happen because it's going to give the fiat currency that competitive advantage in terms of the cost and the speed, at least in the short term, which is going to give additional time for the banks to pivot and maintain their survival. We have Bananax Fusion. Hey man, I'm 16 years old with 130 into BitConnect. We do not support BitConnect. We think BitConnect is bad. We think BitConnect is a Ponzi scheme. BitConnect is a company, and the more, the way BitConnect makes its money is, people have affiliate links, and you put money into BitConnect, and you get other people into BitConnect, and the more people you get into BitConnect, the more money you make, and a lot of people are getting rich off BitConnect. But BitConnect is a Ponzi scheme, and for us personally, not only do we not want to be the last person on that ladder, not only do we want to not be the second or third or fourth last, to last person in that ladder, but we don't want to be any part of that ladder. We think that is a whole system that is going to fail, and so we don't want to be part of that system where a lot of people are going to see a lot of losses, and we're predicting to see a lot of losses at some point in the future. And so we're essentially anti-BitConnect. So you're saying you're 16 years old, you have $130 into BitConnect and 200 more in cash. I don't have any financial advice for you. I definitely recommend that you look into BitConnect, because I wouldn't recommend to anyone that I know and love to put their money into BitConnect. I would just hodl, crypto. I would hodl Bitcoin. I would hodl Ethereum. We so don't believe in BitConnect. Like, we don't ever talk about BitConnect. There's a lot of people that talk shit about BitConnect, that say very bad things about BitConnect, and then they have a BitConnect affiliate link right in their comments. Like, we refuse to even have an affiliate link. I've never even signed up for it. Yeah, so that's how strongly we feel against BitConnect. I guess what it comes down to is that there is a project that we believe in, we'll have an affiliate link. If we have an affiliate link, on some level, we believe in that project. So with that being said, I think this was a good show. I think this was a fun show. I think we learned about a lot of information. You got to go, I got to go, we all got to go. But leave your comments in the comments box below. Like this video if this helped you and brought you any interesting information. It really helps us. It helps other people find this content. Check out more about minting coins in the comments box below, and subscribe to this station so you don't miss out on important news, as we're going to get more and more interesting content to you as major news comes out and as the industry progresses. And until then, and until next time, I'm glad that together we are minting coins.